Hi, Warriors. Sir Isaac Newton is happy that gravity has reappeared. We have lots of gravity in the market. How you doing, Sinatra and Alexander, Michael Weissman, Daniel McKay, welcome to F.A.C.E. New name to me. Hi, Bran, Jordan. Hi, Laura, Ryan, Mike, everyone.
Morning.
How you doing, buddy? So we've been talking about risk off and that this could be a failing rally in the S&Ps. Started talking about that last week, so it's no surprise what's been happening here. So looks like a failing rally to me. How about you guys?
It's definitely looking a bit that way, isn't it?
Yeah. I see you retweeted the DAX. You know, no one's been talking about some of the foreign markets, but the DAX really kind of led it, turned first.
Yeah.
So anyway,
that's not a surprise given what's going on in Germany at the moment.
Yeah. So why don't we start with Kman? We talked about, before we get to that, let me just show you guys the gap of the day. Anyone know what it is? The gap of the day?
Apple.
That's the second gap of the day, but check
Amazon.
platinum.
Oh, platinum. Oof.
What do you think of that gap?
You need a lot of cement to fill that one.
Who wants to buy it looking for the gap fill today? Raise your hand. Okay. Best of good fortune to you. Anyway, so that's, you know, and it's important where it's at now too. David Morgan says the white stuff goes first. So the white stuff is underperforming gold. I think you have to, you know, give gold credit for being able to hold right here. You know, I mean, if you're bullish, nice little pullback. That's all we have here. I mean, compared to silver, and silver definitely way underperforming with look at the gold silver ratio and where it held. So that's even more important. I would think that we're probably going for these highs here. And if you want to go back, this is a pretty good correlation, has pretty good correlation to the dollar. You know, at times not right in sync, but usually this happens when the dollar's strong, because the gold could fight a strong dollar, but silver needs a bear market in the dollar for it to perform. Usually
looks like a bit of an inverse correlation with risk if you look at the equity markets. Good morning, Dale. Morning.
Good morning. Yeah. Inverse, or you mean gold?
Yeah, gold, silver goes up when risk is coming off.
Not silver.
Well, no, the gold-silver ratio is going up.
Oh, gold-silver, yeah. Yeah, so it's tied to the dollar, yeah, risk off too. And, you know, I did notice yesterday with yields up that the bonds held. Just something I noticed. And yields are coming off. Why don't we get to between you and Ryan, who wants to take what's going on in the yen? So even with the dollar firm, the yen's giving it up. Looks like a little bit.
I think this the market is perhaps worried enough of taking the yen index much lower. So now it's recovering a little bit. On the other hand, that takes away some of the intervention threat. So got the impression that it's if you can't be too long dollar yen, you switch from $1 into another, and that's what's weighing on those yen crosses right now, because there's nothing really in the data or Bank of Japan members that is really pro yen right now. So I think it's just managing the books a little bit. It's not really going anywhere either. I mean, okay, we printed a quick new high, then came back off, but it's not really going anywhere fast. I think people are managing their yen crosses a little and then see what happens.
Yeah, we have 2 drives, maybe one more like we already have in the Dixie,
Could be.
with divergence. And
But still,
I
yeah,
also noticed, we talked about this yesterday, that
important level here.
that it looked incomplete. These lines that I draw are magnets. I'm not saying the markets always stop at them, but they get to
Everybody
them.
looks at them, Dale, at your lines.
Everyone looks at what?
At your lines, you know that. They are magnets.
No, I mean, no. Anyone could draw this line. Anyway,
Yours are
what's that?
But yours are magnets. That's different.
Oh, well, I'm just saying it says something's incomplete. And, you know, I've seen enough of these RSI setups to definitely recognize them. They don't all work, but they manifest. And sometimes they'll blow right through that top line. I've traded it, and then you get throwovers and you feel like throwing up. So just go ahead.
The issue with the Chinese yuan is that it's still very much managed, and as we've seen of late, every time we come close in the dollar CNH, as you're showing there, I think every time we come close to the 2% leeway that the PBOC gives to the dollar CNY fixing, we put in a top, or there's a risk for Chinese local banks to start selling dollar CNH, and it's actually we've nearly pinned it, because that top of the band is 734.25, and we are really very close. So I would keep an eye on that level. It's undeniably big, but I would keep an eye on that level though.
Okay, because you know, I mean, the dollar is overdone. And I have to hold myself back from trying to counter trend trade. You know, but I still think 108 is in the cards, and I just noticed how it could happen if you have equal legs. This was 500. 103 was kind of a breakout too, so you just tack on the 500 there. It gives you near 108. But you know, I have more discipline, and I'm tired of trading counter trend, getting nickel and dimed instead of just staying with it. So I'm still trying to learn.
There's definitely something going on at 107 on the euro dollar. This, whether it's lazy bids or we've checked, but there's not too many big options. There's doesn't seem to be any barriers, but there's definitely something going on around 107 on the euro dollar. I suspect there's somebody bidding there, whatever it is, for take profit or corporate or whatever. But there's definitely something going on here, just above 107.
Okay, and Ryan, EG's trying.
Yeah, it's giving it a go up at that 86 level again. Just mentioned it might be keeping cable from breaking through 124.50, that big level that's been in play for months.
Well, so you have the 200-day right there.
Oh yeah, but that 124.50, you can just see it going back there to that beginning of the year period with strong resistance. It goes back further than that, and we're just knocking off it at the moment. On my platform, we made a low of 49.5, but it's holding for now. But that's coinciding with euro staying up at that 86.10 level. So it could hold it, or it could help break it in cable. If it goes through 86, probably see cable heading lower, back at least down to that moving average, I would think.
Okay, I do have to touch upon Apple. You know, I was interviewed on Real Vision, and I said the Chinese would do something like this many months ago, and it was dismissed as extreme, pretty extreme. And it is extreme, but you know what? We're in a Cold War, so we're getting a pretty good gap today in Apple.
That was a strange one, because I think that news was out yesterday, and when I saw it, it was 3 hours old, and I looked at Apple. I thought, oh, that must hit Apple, and it had done nothing. And it was only today that it's really gone. Oh
no, it got hit pretty hard yesterday. This is yesterday. So
yeah, I didn't think it. Yeah, but it was. What I'm saying, it's delayed as reaction. When I looked at it, it was still trading up around 187s.
Because because your guardian angels were giving you a window to short it. They
Yeah,
said,
the only
Ryan,
thing
the
so-
news is out. The news is out, but we're going to wait till you do something. Then we'll let the market.
You know, when you
know.
think that's too good to be true, surely that must be in the market. And
Yeah, right.
I saw it, how it transpired afterwards. Like you say, that candle, looking at it today, and it was like, oh, blimey, could have had a nice little couple of quid on that.
Yeah, and Amazon rolling over too. Possible head and shoulders, but another failing rally when Nvidia got clipped pretty good yesterday. So look at the divergence here. So I think there's still a big break coming, maybe a gap fill. And here's the regional banks. They still look pretty ugly. Look at this, that big rally we had in the S&Ps last week. This is the best the regionals could do, like 38% back, where the S&Ps were more than 61.8 back, I think, here. They got through, 04 was, so they were trading about 30 handles above 61.8. This setup today doesn't look good. I mean, we held yesterday, but if we start taking out yesterday's lows, I still think 42, 4100 is common. So
hey Dale,
I've talked enough. Oh, Grega's here.
yeah,
Okay,
I just
how are you?
Yeah, I'm fine, thanks. I just wanted to add, yes, that this S&P 500 looks really bearish right now for that wave C decline, and I think that we completed wave B, so definitely we could retest those August lows, I think.
Oh yeah, okay. And what would convince you that it's a 3 instead of a C?
I mean, yields should, I mean, I cannot imagine where yields would be trading at that time and what will happen then to the US dollar. I see US yields coming higher into the final fifth wave. So I said earlier that looks like the recovery is incomplete. So we have probably this one more high coming, and then I would assume that we are approaching the end of these higher degree cycles.
You sound like Dale Pinkert. He's always top picking. Yeah, I hope I wasn't a bad influence on you. But anyway, sometimes Greg, and these fifth waves, the rubber band, you never know how it's going to stretch on these.
Yeah, exactly. But if you consider what may happen with Fed going forward, even if they will hike more than everyone expects, I mean, dollar has made a pretty strong move so far, so it still could be buy the rumor, sell the news impact at some point.
Okay, so I know you thought the dollar would have some problems up here at 105. So so
exactly.
Here we are, and it's basically this
105, 106, yes.
Yeah. And then when you said that, I said, Grega, we got to take the stops out over this high.
Yeah.
It's like a grand prize. What is it? 105.88.
Yeah, right there, yes.
So we're a day away from doing that.
Yeah, I mean, timing, it's pretty interesting. I mean, we are running here, we will move into the final months of the year. So I think that this will be quite interesting still in the upcoming months for potential reversals. I don't believe the dollar could hold these gains through the rest of the year.
Then you must be looking for some kind of short coming up in US dollar yen.
Yeah, I mean, dollar yen has a pretty nice 5 waves up so far. If you look at your structure from
the weekly, 1, 2,
from
3,
July. From July lows.
Oh, okay. So we don't need a weekly. Okay. So from here, yeah. 1, 2, 3.
An extended wave 3, wave 4, and now you had a wave 5 up there. So I think that this is pretty strong potential resistance. But as you know, we could easily extend even towards 150. So for me, it's just important to see a top, at least on the intraday chart. So we have to see some aggressive drop back below 144.50. It was low after non-farm payrolls report last week. If we can break this one, then I think that we are topping out.
Hey Dale, I'm going to take the screen because I'm going to show Grega's charts on ForexAnalytix. So.
Oh, sure, buddy.
Yeah, just so you can, so Grega, you can kind of talk your count through.
It'll give me a chance
here.
to try and draw a line.
So here's what you're talking about, Grega.
That's dollar index.
Oh, what weren't we just talking about the dollar? Or are you talking about
dollar yen?
And then the
yen. Dollar yen. Okay, sorry. Let me grab it.
Yeah.
There you go. Yeah, exactly. So you see 5 waves up, and as I said, the FIPS that I'm looking for are also at 150. And I know that this is very, very big level. Everyone thinks that if we hit this level, there must be an intervention or something. So I think that it's technically definitely very strong level, and I think it would quite attractive. For shorts, if we see any kind of a strong drop, then I would go with the flow. But for now, definitely too risky at this point.
You know, I'm glad you brought that up, Grega. And good morning, team. I hope everybody's doing well. You know, I wanted to get you know, the European guys, what their opinions are here. I actually have orders that are out to sell, start selling dollar yen near 150, but I have a feeling, just like Grega said, I think everybody's trying to sell up there. I wonder, you know, if we're even going to be able to get close. I guess that's my question. What are your thoughts, Ryan?
Sorry, what was that, Blake?
You know, the dollar yen making it to 150. I mean, you know, I'm not so sure it will, just because everybody's trying to sell up there. I mean, I would assume everybody's trying to sell up there. But
well, 148 is apparently some people's new intervention level. That didn't work at 145. I'm not sure it'll work at 148 either. There's two things. You know, there's definitely a slowdown now. It's not looking like it wants to go higher. That might be the market a bit more nervous after candor. But one thing that struck me this morning when reading back over last night's stuff was that none of the officials were out again. Usually when we got that level of rhetoric and jawboning, they're out every day, you know, pushing the words and the themes and pushing the message. And it was radio silence from them, which is very strange. But, you know, the dollar's bid, we know it's well bid, it's staying well bid. And got data like the ISM yesterday gives it reason to continue staying bid while other countries are suffering a bit more.
Yeah, that's the thing, right? I mean, US data continues to impress. I mean, that ISM data was a blowout number. Now the PMIs, the S&P PMIs just 15 minutes ahead of that was a little weaker than expected, but it was still in expansion territory. So you know, can't complain too much considering what, you know, other countries are doing. Kman, what are your thoughts about us reaching 150 here?
That'll depend on the dollar. Really, it'll depend on the dollar. It's starting to look a bit slowing down, this dollar, so we may need a fresh catalyzer to take it through 107 down to below 106s on the euro, and the yen will be probably the same for the time being. Actually, the yen is strengthening a little bit today, so I think there's a bit of a rebalancing going on between people being long dollar yen, perhaps selling a bit of yen crosses and reducing the dollar yen positions as such because of the threat. But as far as interventions are concerned, it's all about the speed and where the trade weighted index of the yen is, and there it's going to be pretty I'm not saying complicated, but pretty tough to find the level where they could intervene, because imagine that dollar yen goes to 150, but your euro dollar is trading at 105 and cable is trading at 102, for instance, and all the rest.
Right.
But your yen trade weighted index is still above where it is now, 82, 81 something. They may never intervene. That is something that the market should actually should actually consider. It's not only the dollar yen, it's the trade weighted index plus the speed of the move. If this goes at a snail's pace, it can go up to 153, 154 before they even step in. They should or could intervene, of course, but above the psychological 150 level to show their hand again. But there's no guarantee for me. And if you look at the Bank of Japan, there's more comments out again overnight. They are sending us into 2024 for any moves of the Bank of Japan. They could always surprise, but so far we haven't heard any of them saying that, yeah, September is live.
Yeah, true.
And that's the risk for people trying to be long yen.
Yeah, that's been it seems like ever since well, the last couple of months, ever since they tweaked YCC just slightly, it's like, okay, well, that's it for the year, you know, which and you know, to argue their point, we've seen their data come in, and it's not like their data is super hot, and if you know, you look around and you're the Bank of Japan, you're like, okay, the rest of the world's slowing here, and you know, inflation's coming down. It might take a hold here in Japan as well. So you know, I can see why they're not super aggressive at this point. But yeah, watching the trade weighted index, the 6J, I think does make a lot of sense. So thanks for your input there. Hey, Grega, while you're still here, what else is big on your radar that you're seeing from an Elliott wave perspective?
I think that if the dollar is really potentially coming into the resistance, I would be looking for dollar Mexican peso to turn back to the downside. We have a pretty nice, clear ABC rally from the lows that we discussed last time. And I think that this resistance, the channel resistance, comes actually from September of last year, comes in around 1780. Okay, and then you have also this former swing low from March of this year. So I think it's a pretty interesting levels here. We know that Mexican peso has been pretty strong, so those kind of pullbacks are just, in my opinion, just, you know, opportunity on the short side.
Yeah, and speaking of which, the Euro Mexican peso, I was on the trade-off last night with Chris Weston, and we were talking about the Euro Mexican peso right up against resistance, which it hit and reversed already. The dollar Mex is trading at the breakout point right now at 1745. So, and we did have inflation data that came out of Mexico overnight, and it actually came out 20 minutes ago. And what was it, Kman? The month over month was a little hot. The year over year just slightly below expectations. So
yeah, it's slowly trickling down. PPI also just came out somewhere around flat 0.1, 0.5. But I agree with Grega. I think the what we've seen in the MEX is a scare move after the Mexico's currency hedge stuff, and yeah, it's I'm still not a bear in for more medium-term bear in the MEX, you know, and as you also already mentioned, that Euro MEX has capped just below 19. I missed my sell order for 50 pips overnight.
That stinks. 50 pips in the Euro MEX is like a half a pip in the euro.
Yeah, that's it. I mean, it was so close. I think 1897.60 or so the high, and I was offering at 98. Yeah. But then I sold it a bit later, and I think the biggest scare may be over, and now it's really over to economic data. But just one thing, when we talk about the MEX is going to be very reliable or reliant on US data, right? Being such a big trade partner.
Yeah, for sure. Hey guys, now I wasn't paying attention to this, but did you see yesterday the zloty? This is crazy. Look at that move.
That's what entering the rate cut cycle gets you.
Yeah, they cut rates by half,
nearly a year to the date
more.
Yeah, a year ago they hit their peak 6.75 and decided to cut by 75 pips instead of the 25 expected.
Woo, man, that's crazy.
Wow. Probably a good time to buy some pierogies.
what a move. I wasn't even paying attention, and then I was talking to Chris Weston. He's like, "Oh man, did you not see that?" And I'm like, "No, I was a little under the weather yesterday." So anyway, yeah, what a crazy move there. Out of Poland. So they came
in and intervened.
What's that?
Then they came in and intervened.
Yeah, seriously. Did they come in and intervene this move?
I think they did this morning. They threatened to yesterday, and they might have done this morning. I can't remember.
Well, obviously, it's the market could say is just giving them the middle finger right now and saying, yeah whatever.
Smells blood.
Yeah, right. Kman, I think you made a really big, good point on the euro. It seems like the euro, there's a lot of buying around this 107 level, which, I've been around enough institutional traders, looking at flow as you monitor flow as it's going through the market. And the problem with the euro is if it dries up, if it's like, if it's an official bid, maybe it's Asia or it's China, it's picking up euros at 107. Once the buying dries up, I think you got to be a little careful here. And we do have weekly unemployment claims coming out. We have CPI next week. Both, you look around at the data, the US data is not bad. And, I say bad in how about this? It's not, it's not weak. Let's just put it that way. And until we start to see some data come in weaker than expected, and we see these weekly unemployment claims like we'll see in the next few minutes, they come in a little weaker. If they do, this dollar just looks like it's threatening for the euro to, just break below 107. What do you guys think about the dollar here? I mean, you got the as you pointed out earlier, the sterling's at 124.50. We knew that was a big support yesterday. That's why we put an asterisk here on the bias chart. Because we knew there's the 200-day moving average, big breakout point. You can see the previous highs right here. What do you guys think about the dollar here? I mean, do you continue to play it on the long side? Ryan, let's go with you really quick, and I'm going to get ready for the data here in a couple minutes. So,
yeah, I think this 107 is in a bit of trouble. Just as I'm watching it now, we're seeing yen finding a bit of a bid. So we're seeing dollar yen coming down, a lot of the yen pairs coming down, but not much happening in the majors. But yeah, you've got to side with the dollar at the moment. Even if the US data turns, it's unlikely to be as bad as the rest of Europe anyway. So that still favours the dollar. So there's two big reasons why the dollar should get some tailwinds behind it. It has to really crater. The economy has to really crater to get some real dollar weakness in. But you're going to hit levels like this 107 in euro dollar, and you've got something to trade there. You can try longs, but be careful on the break.
Hey man, you got some thoughts here on the dollar? How do you want to play it in general?
No, I'm still short euro dollar.
You're still short euro dollar,
and I'm like, for the rest, I'm more like jobbing in and out, scalping, and but we were talking about the sterling this morning. It's and how emotional people get when it's turning to one or the other side, and again now this 124.5 better hold, or it could do another leg lower there. And there's definitely still something going on at 107 in the euro. We did 02, and it's still holding. So there must be some lazy bids around here.
Yeah, I was looking for see if there's some big options expiring around there or anything. Nope. But you guys also talking about the S&P. I want to cover it really quick. We are at channel support. We drew this out yesterday. We completed a head and shoulder pattern. If you all didn't see this, over the last couple of days, there's basically a shoulder, head, shoulder. We were just talking about in the chat room that it is all completed, but we held channel support. So you can see we're at a support zone here in the S&P. It's pretty critical. We start breaking below this 4440, we might trade down to, but below 4,400. So a little bit of exposure there if we do see the S&P move. Now, remember, good data is not good for risk. Your strong data out of the US, people start looking at the Fed and saying, well, the Fed's just going to have to keep rates higher for longer, and stocks are not responding well to that. So we have the S&P right here in the middle. We have the 10-year right over here. S&P, or I'm going to put the dollar index right here. Grega, we have about 30 seconds. Any comments on the dollar really quick before we finish up?
For now, I'm still holding shorts on Aussie, but I'm ready for a shift in trend, as I said, for next week probably.
Very good. And Dale, we have this data coming out here in a second. I'm going to pull out the data flash. Here's the dollar on the left, the S&P in the middle, and you can see yields over here to the right. So let's see what those unemployment claims come out. I'm not really too worried about these unless we start getting above that 260, 270 level where we peaked a couple of weeks or maybe a couple months back. But let's watch them. Data is
216 for the
216.
jobless.
1.67.
That's good data. Look at the
Labor
euro.
cost a bit higher,
3.5%.
productivity a bit lower. Yeah. Okay.
I mean, strong data.
107 is gone.
Strong labour costs and productivity revision as well for the quarter for Q2.
US exceptionalism, guys. I mean, that's kind of what it's looking like right now. So, you know, it's keeping the dollar well bid. I think
It goes 107.
What's that?
107 euro dollar's gone.
Yeah, I've been short for the last couple of days, sized up here too. I think I might take a little bit off because I added to it yesterday. I think it's you know, it's just a matter of time before we trade down towards 106.50. But you know,
Yes.
so it's, hey Dale, have you ever met a rich man going broke taking profits?
No, you never know. Bernard Baruch said you never go broke taking profits.
All right. So, hey, I know we have a special guest today, but before we bring him in, I want to say thank you, Ryan and Kman, for your coverage on the Flow Show. If you guys don't check out the Flow Show, it is every day. It's free and it's, you know, right here. And Grega, thanks for being here and doing the week ahead video last weekend while I was in California. I appreciate that. And Dale, I'm going to pass it over to you so you can bring in Mr. Adam Button.
Thank you, team.
Cheers, guys.
Hi, Adam. Welcome back to F.A.C.E, my trading warrior brother. How are you? Looking for your name up here now. You're not with the panelists.
Oh, I don't see him either.
He was here. There he's in the attendees still. So
let me see if I can find.
I got him.
Oh shoot! I just hit remove from panelist, promote to panelist. Hold on, he should be coming over. There he is.
Hello.
There Adam, how are you? Welcome back.
Okay, good. I'm doing
good
great.
To have you. So King Dollar. Anything you want to?
I mean, that's a strong claims number after yesterday's ISM number. I think we're rolling here pretty well, really pushing back against the recession narrative or the slowdown narrative in the US.
Well, I want to acknowledge that last time you were with us, your bearish euro, several hundred pips above here, where, you know, we had just come off the 112 high. So
yeah, I mean, that did it ever get swallowed up on that pop last week too, or at this over the, you know, up to 109 and just erased.
You have longer term targets. I'm looking for the potential of, you know, this 102 level. I think longer term, I'm not saying we can't have a bounce, but that's around 61.8 back down here. But look, I mean, go ahead.
You know, I think the numbers, this is going to be what we're going to see over and over again is soft Europe numbers. I mean, it turns into a bit of a weather trade in the winter. You know, Germany, I think it was important last week, the economy minister came out and said that they couldn't get a deal on subsidizing energy. And, you know, earlier he was calling it existential for large industry in Germany.
Yeah.
And they said, you know what, tough luck, because it was tough with some smaller businesses and medium-sized businesses and big manufacturers to kind of make it happen, plus the deficit concerns there. And they gave up. And, you know, there's some bit of a corporate tax break, that kind of thing. But, you know, China's coming for their cars. You know, Russia's already come for their energy. And, you know, maybe the rest of Europe does okay. Italy's been doing better than really anyone thought. But there isn't much to like.
What do you think of this statement that even when we do eventually get to a pivot and rates begin to fall, that the dollar doesn't lose its advantage because rates will drop faster in Europe than here in the US?
You know, and I think that's the case in a lot of places. US was one of the first to hike, and it may be the very last to cut because it's just not biting that hard. And the relief valve in that case would be the dollar, right? And you start to get, Goldman Sachs has been talking about it, and I've been a dollar bull for a long time, is that what's really to stop the dollar? Like okay, maybe the Bank of Japan takes a swing at it. You have China intervening as well, but the fundamentals are clearly a dollar driver. And where rates are pushing up again, I don't know if I believe in this rate move and yields pushing higher, but it is what it is. And if it pushes even higher, then you kind of just have all these elements for a dollar move that who's to say where it stops. And these things tend to go way farther and way further than anyone thought possible. I was trying to put my video on there, Dale. I'm not sure if that works, but
you can.
Say the host has prevented it, but that's all right. Nobody wants to see me anymore.
Oh, I don't know how that happened. Usually it's wide open. But anyway, we'll be on the radio today.
Well,
so
that's fine.
So why don't we talk a little bit about one of your favorite markets, and maybe we could tie into your seasonal work as well. Risk looks pretty negative here. And did you ever think you'd see China, pull a move like not using Apple phones by government?
Well, that's
workers?
Big, right? I mean, that's 60 million phones, and that might be the tip of the iceberg. I think that's probably a bit of a warning to the US.
Stop poking us in the eye with the arms packages to Taiwan that we reserve for sovereign states. You mean foreign policy like that?
Exactly. And there's obviously
why don't we send some uranium depleted shells to Ukraine? They only have a little radioactive dust on them. But
there's a schism, right? It's like a total tech schism.
Does the US want World War III to start here or what?
Okay, a lot of questions there. So the bearish seasonals, it's I think it's pretty well known now. August, September, for stocks, and it's sort of unfolding now, and it's getting a bit of a kick from data. Just needed a reason. You guys earlier were mentioning the head and shoulders in the S&P 500. I mean, it's pretty well defined there, and there's a little bit of work to do to get to the neckline, but you have to zoom out there to see it. But
I know what you're talking about, but
and then in terms of things like Apple, I mean, it's slowing. Tesla, it's up 100% this year. Profits are down 20%, and there's a lot baked in for next year in terms of how much money they're going to make. But rates are where they are, and the car market is in tough right now.
Yeah, people are turning in keys. They're turning in keys on what they have right now.
Yeah, and the used, I mean, there's just a lot of uncertainty. I think that's the natural. I mean, we've seen the prices. I went kind of viral on Tesla prices falling, and that's kind of the deflationary impulse. When you see prices falling, you don't buy because you think, well, I don't want to be the bag holder who buys a $120,000 car that's selling for $80,000 a year later or 8 months later. So. I don't think that could be very good for orders for them. So, there's a couple companies or 7 companies really carrying the whole market. And again, you take out Apple, Tesla, Nvidia, a lot of big questions about them.
Good thing they rebalanced Apple. You think they knew?
Well, maybe that helps a bit.
I mean, didn't the rebalancing happen? And that was high. So I want to ask you this, Adam, because this is what I'm hearing. So even when people are negative the market short term, I don't even ask them, well, is this, going to be a big wave, or they come out to qualify, quote, it's happened a handful of times now. The market could come down, but I'm not calling for a crash. The market, yes, it could come down. It's only a correction. It's healthy. That, to me, being the contrarian, tells me that even people who are negative are complacent.
You can feel that complacency in the market, I think, right now. That's kind of the coming out of summer thing. And I feel that is part of the seasonal thing. Okay. Is that you get that August kind of move. All right, it bounced off that. but there is just a whole bunch of complacency around, and even this bad news is good news narrative and good news is bad news. Like it's all very jumbled, and whatever the rates market is doing. So it really feels like there's just not a good reason to be buying a lot of risk right now.
Yeah.
But it seems like people want to buy bonds too, and then you get a week like we've had this week, and how can you buy bonds?
They did.
So
Yeah, they did actually have a little update TLT yesterday with yields pushing up. We'll see what, and they're called, pretty much unchanged. So we'll see. We still haven't taken out the 90 level. That's the low made last October. So
I mean, it's pretty compelling. It's what I'm doing right now is getting long duration and thinking about different ways that's going to work, because rates aren't going to stay here forever. But timing it is I mean, it's tricky right now. I mean, you've got to take the data with what it is. I mean, inflation is coming down though, but 229 jobless claims, ISM services 54. I mean, those are pretty good numbers. But you listen to and then Visa and MasterCard wrote in their most recent comments pretty optimistic about spending as well, not just in the US, but everywhere. So, and then you mentioned China, and everybody's digging in on China, and we've all been digging in on China for 20 years, but you just dig, and it's really hard to maintain any kind of conviction on China because you just don't know. I mean, it's obviously slowed down. The real estate is busted, but if it's a 30% correction on real estate after a 200% rally, I mean, how many people are really underwater?
How is it in Canada with the adjustable rate?
You know what? I feel like there's another leg just happening here now to the downside. I think Canada's mortgage market works on this 5-year cycle where you get resets, and people are getting, their monthly mortgage payments going up, say $2,000, which is just wiping out discretionary spending.
Right.
And that's the dollar bull case, right?
Yeah.
Is that the US, you don't have that. Whereas in Canada, Europe, Australia, you do.
The rest of the world, we're more insulated. That's really the rationale, is that we're back to, cleanest, sturdy shirt.
It's the simplest. I mean, the simplest trades are the best one, and that's it. And I think everybody would like to get the dollar cheaper if they were buying it, but I don't know.
There have been no pullbacks, hardly any. The whole way.
Well, even like last week, we showed that euro chart. I mean, you got 3 days of euro gains, and then just the bottom falls out. And even yesterday, you had not at the ECB pushing back, saying rate hike chance or higher than the market thinks for Europe. But I don't know if they say they do hike this month. I think the market sells that pretty quickly as well, because ultimately it's going to come back to growth. So probably back to parity and below. I mean, it looks like it's breaking down here now.
Yeah, look, it's getting ready to take out a 50-week moving average. Yeah,
I mean, that German industrial orders number yesterday was terrible.
Yeah. So Europe's in recession already. China, we know they have problems. So explain to me, I know it's a supply situation, but you're normally constructive on WTI, and that surprised me. I thought we were topping, here. Okay.
Yeah, China certainly made it seem pretty cautious here, but this is I think if we turn around today and we're down 50 cents and we get inventory data, this will be 10 days in a row of gains. So massively overstretched. I mean, if you have like that dollar RSI, I'd be curious to see what that is if you switch to a 1-hour chart there or a daily chart.
We're starting to get a little divergence in the dollar.
But so for oil, I mean, it really is, I think, a supply story. We're around 2 million barrels a day out of a 100 million barrel a day market short on oil, and even small imbalances in the oil market can make for massive overshoots. And you don't have any US supply coming. If anything, US supply is going to disappoint, and there's nobody else that can pump. So barring a break in OPEC, it's really up to Putin and MBS to decide how high they want oil before they start pumping more. And it's obviously not here because they just announced an extension. So you have to assume it's 100 Brent, maybe, and then 100 Brent for a time.
Yeah, the charts point towards 95 on WTI.
And do you get a demand response? You know, a lot of people watching China, but actually the numbers have held up really. Can you pull up a daily chart of that? Yeah, that's what I want to see.
Sure, buddy.
Because it's going to be like the RSI has got to be like, well, it's not insane, even after, but you know, clearly overbought. And but I just think, okay, you get 84, that's where you buy, and then. And spreads are blowing out, like diesel and gasoline inventories are very tight as well everywhere.
And maybe Europe's not going to be as lucky on the energy side this winter, not have a mild winter. You have a vibe on nat gas. It's like this grinding bottom that the Widowmaker is trying to put on.
You worry a bit about oil, like the oil gas interaction, right? So you get up to $100 oil again, you get more drilling, and then you get associated gas with it, right? So you drill a well, it has say 80, 70% oil, 30% natural gas. Well, you don't need the natural gas, right? So you're adding to a market that's oversupplied. And I don't know if there's a lot of discipline on the gas side. Now there is some LNG coming on. So that takes away some gas. The US is exporting a lot of gas to Mexico now. So that's kind of adding, and I think eventually there's going to be a convergence to maybe around $5, but that's in the back half of this decade. And so, you know, for now, there's, you know, seasonally it's good natural gas at this point. And it usually is good right until you get about that first cold day in New York in maybe October, November. And that's usually the time to get out of any kind of natural gas trades. And then after that, it's just all weather. And you know, it's the El Nino, whatever it is this year. And that's supposed to be good for weather.
Grande El Nino.
That's, you know, supposed to keep it warm. Maybe that's a bit priced in, but come on, it's trading weather. You got to be out of your mind.
Should I cover my shorts in platinum down here?
Well,
I'm kidding, man.
We're coming up to a nice, you know, time of year in precious metals. Call it end of November.
Okay, because gold's been holding like a champ, with silver getting decimated. So
and the gold miner's pretty cheap, even with the price of gold. I don't know if that's pricing in inflation. I mean, energy is a big cost for miners, but you know, central banks are buying. Eventually the US is going to turn, right? At some point in 2024, they'll get pretty dovish. And I just, you know, you got to look like, no, the miners are way off the highs there.
Yeah, here's a weekly, bigger picture. So we held this level, this GDX a few times. Under here, I think we could get to 70.
Yeah. I don't think there's a big rush. You want to be there by November, and if you get a good opportunity to get into gold before November.
Okay, so October, November, time wise is
seasonally,
that's like, a good time.
Yeah, middle of November, I'd say. Late, if there's opportunities before that, or something fundamental aligns, maybe we get a flush in stocks, takes gold down. Yeah, and that's all looking kind of possible.
Yeah, doesn't it? A flush in stocks. You know, again, people are saying correction, it's healthy, but you know,
I just think that there's just there's a complacency about the moves, right? Even you know, 40 points yesterday, 30 in the futures now, getting a little bit ugly. And then suddenly you wake up and there's 100 points down. Yes, the SPOOs are, you know, 1.5%, 2%. And then people wake up and say, wait a second, tech's had a huge run, got to take some profits. Yield's still high. Fed's not coming to the rescue anytime soon. I think the real, you know, okay, say you have like 70-80% of the time stocks are going up, right? In general, over the last 50 years.
Yeah.
When they're not going up, in most of those times, is when the market wants the Fed to cut, but it's not cutting. Right? The market doesn't mind really if the Fed's hiking. The market likes when the Fed's cutting. But when the Fed kind of should be cutting and isn't cutting, that's when the market really kicks and screams, or wants more QE or whatever. It should be easy.
I mean, when you look at this weekly, isn't it possible, the highs that we had here, that this whole thing was a failing rally, just a bear market rally after the top, and that we could have something like this from up here to take it to 3,000? Why is that such an extreme view?
Yeah, well, like I said,
why is that so extreme? People say I'm extreme.
In 20, as we look ahead, there is going to be this time when the Fed wants the market to cut. Everything's slowing down, inflation's slowing down, but the Fed is just going to say over and over, we want to make sure the job is done, right?
The Fed other central bankers might be the same. Maybe the Fed wants 3,000 S&Ps.
Well, they just want to make, and it's in the long view, it's a good, like if you crush inflation, I mean, then coming out of that, it looks so good, right? If we go back to the kind of new normal, the 2010s way of trading, it was just low inflation, low rates, party time. So crush inflation once and for all, take the medicine. Yeah, if it means S&P 500 down to 3,500, maybe 3,000 seems extreme, but something could go wrong.
See, there again, another person calling me an extremist. All right, okay, look at this regional bank chart. You want to get long here?
Yeah, the commercial real estate is such an overhang. It really is. I mean, they all own it, and office real estate is just dead in the water. Yeah. And they're going to be bag holders. And if they have to raise money, they can't raise money. I think that's the thing. That's what that the KRE is pricing is. They cannot raise money if you're a bank, because you have to realize losses on your bonds in order to do that. And it's just a death spiral. So you're basically you're going into this war right now with commercial real estate with the ammunition you have. And nobody knows where the bodies are buried, right? You look at the whole world of office real estate, and then maybe other commercial real estate if we are going into a recession like retail, and it's just too much pain coming.
Okay. So I know long term you talk about how long it takes to get a mine online, like the copper. It's showing really hasn't gone anywhere for a while.
Well, I'm worried. I'm worried because the whole thesis is really the green transition, huge spending. We need a ton of copper for all this stuff. Even just building out transmission properly needs so much copper. But half of global copper demand is China. And built into every forecast for copper is decent growth coming out of China.
Okay.
And even if you have, say, 1 percentage point or 1.5 percentage points miss on Chinese growth for, say, the next 5 years against what is built in, then it tips back into surplus. So with what's happening in China right now, I'm mostly sidelining copper.
Okay.
Because it's just far too uncertain until we get some real stimulus or a real sign that things are picking up, or really just a real sign that the leadership in China cares about hitting the growth targets. And I think they're sending the opposite message.
Is it possible that the Fed's campaign and what they've done has done more damage to the global economy than to the U.S. itself, and that if we continue, keeping rates up when they should come down, the more of the carnage is Europe, China, and we're not immune, but it seems like the pain is being more distributed outside of the U.S. for mainly a U.S. policy.
Right, and I just think it boomerangs back through the U.S. dollar, right? If eventually you get a really significant move higher in the dollar, and I think nobody's talking about a big overshoot in the dollar.
No, you know what? I'm so glad. I'm glad you brought that up, Adam. That's so great because even the dollar bulls like me, we're looking for 108. Basically saying, how can you be bullish a dollar after this decline? And that this is only going to be a correction. But there are guys like Brent Johnson, the milkshake theory, that says a dollar could just take out these highs.
Well, they don't, these long-term moves, they don't end with a whimper. They end with a huge overshoot. And I think that you have to think about that if the U.S. keeps doing what it's doing. there's worry on the fiscal side, but I don't think that hurts the US dollar. And eventually the pain comes back through, say, something like manufacturing or exports or competition on that side, because the euro becomes so weak, everything else becomes so weak that you can't invest in the US. So, but that,
so this is a wild card right here.
China and even China, so they have this policy option, like they're struggling with what to do right now. Do you go into debt and stimulate more? And that's one of their options. Or two, or do you let it go and just pick up the pieces? Or number three, do they really let their currency go? And remember, they're buying dollars, or they're selling dollars to keep their currency strong, right?
Right.
So they're trying to keep or weakening it. What if they just let it go and say, you know what, we're going to export our way out of this economic weakness with we'll let it run to 8 or 9.
Yeah.
And then that's a big tailwind.
That's a
for
deflationary. That's shifting their deflationary impulse to us by doing.
Well, that's it. And the manufacturing, and they're coming for cars. I think cars is such a big. They're cranking out cars in China. And
ever hear that song, Counting Cars?
I don't know that one.
Oh, all right. Anyway, okay. So you mean the EV market is a real big battleground?
Big battleground. And they look like they've got some winners there. And, what did we see this week? I saw headlines, the average new car price in the US, $66,000. I mean, if China is putting out $30,000 EV, maybe not the best range.
Mm-hmm.
Maybe that doesn't land in the US, but maybe in wherever, most of the rest of the world, there's a big market there. And maybe they take it. And especially they say they can take it with a much cheaper yuan, and they've got the batteries, right? So, and that's
got the lithium, they have everything.
So that I just think China devaluation is probably at the top of my radar for and then, I'm watching the Bank of Japan as well. You were talking about an intervention in Japan before I came on.
Yeah.
I'm not that worried about 150. I think it's 155 is where they get really serious, especially if it's a dollar move, right? Like if the euro's falls down to 105 or 103.
Yeah.
It's not just dollar yen they're watching, right? It's the overall level of the dollar. And that depending on what China does, I think the coast is still clear for dollar yen longs. But the one to watch is the Bank of Japan. If they say, okay, we have to start raising rates, I think that's really a bigger move than just plain intervention.
Okay.
But they're talking about stimulus in Japan now in October. So I'm having a hard time getting my head around what the inflation picture is actually in Japan and the growth picture, because it's been good this year. They've been a standout performer.
Yeah, the Nikkei it hasn't made new highs for a long time. I don't know if things are as weak there. I know the DAX has really been. Here you go. Here's the Nikkei. So we have a potential failing rally here.
Well, it's been, Nikkei. I mean, there's cheap, a lot of foreign stocks are cheap, but I just don't think there's any appetite.
DAX kind of led this top in the S&Ps, didn't it? Really ran out of juice, didn't do anything in the summer.
I don't know if that's a week, but there were a lot of doji stars leading into yesterday, and then it was soft yesterday. It's kind of medium soft today.
DAX is running off the tracks.
Well, it doesn't look great.
Yeah.
And who would want to own it into winter? I just don't understand why you would want to own anything in Europe into winter. And maybe it's too early for that trade, but I mean, if you get 30 below in Germany, forget about it.
Yeah, they were fortunate last year. Yeah. Well, Adam, I really appreciate the clarity, especially, the risk of China just, letting the yuan go, because they have been trying to defend it.
See, I just should spell that out, since the risk of that is they don't want capital flight. I think that they worry that if they let the currency go, people take their money out of China, right? And then they want inbound investment, right? Because the US is cutting off investment there. So they want to keep money in the country. But you know, they have ways to keep money in the country, right? It's a totalitarian society. You can't just take money out of China. It's against the law. Obviously, people find ways, but that is sort of the policy mix. And then right now, I think they're trying to do little things and patch it up, but I think eventually they're going to have to make that decision.
Adam, so great to catch up with you every time we do it. So there's your neckline. Take a snapshot of DAX. You have the 200-day and a major support level down at 15,472. And Adam Button does great work, everyone, at Forex Live. One of the best news traders on the street. And he's a darn good writer. So, you know, go to forexlive.com and check out Adam's work. Also follow him on Twitter at FX_Button. So Laura likes listening to us, she said.
Yeah.
And Adam, I just want to say thanks for joining us today.
Well, yeah, thanks for having me. A lot of central banks be coming up today, so that'll be a drag, but
okay. Everything cool at home with the tribe?
Yeah, the 4 kids. Yeah, they're running me ragged. So school's in though, Dale. School's back in.
Adam, great catching up with you, buddy. Really appreciate you stepping up. And yeah. All right, everyone. So that's a wrap. Follow Adam. Should be part of your intelligence gathering. And that'll be a wrap for today. Join the team in 14 minutes on the morning edge. And you need the edge when markets are on the ledge. So I'll see everyone tomorrow. Don't just count your pips, count your blessings. I have a real bear coming in tomorrow at 7 Sentinels. Don will be with us. Adios, everyone. See you guys. Thanks, Sinatra.